Hey, Dan Passarelli here. Welcome and happy almost end of the week. Holy moly, what a day it was. S&P 500 up 1.7% today. Do you believe it? Wow, things must be so much better than they were yesterday, I guess. We did have the initial unemployment come out today, and it was fine. Yesterday was CPI, and it was fine. And PPI was fine. It's all fine. So what does that mean? That means the market rallies up, gaps up huge through the 50-day moving average. That means we should see some follow through, right? Well, kind of right. But from a technical standpoint, from a technical standpoint, it's never what should happen. It's more what is likely to happen, visualizing momentum, right? But it's the same circus, different tent, man. Because if you look at the S&P 500 ratio today, it's 28.5, which is still very much at the top of the 10-year range, except for that one little crazy part that happened during COVID, where, prices got really depressed, and you know the story. So we're still sitting up here very, very near the top of the 10-year range. And what financial and fundamental drivers get us to this point? It's nothing. I mean, the only thing that could get us there is if the market is expecting earnings just to really be on fire over the next few years. Because instead of using the trailing 12 months, sometimes they'll look at the next 3 years or so. So, I don't know. Right now, the Fed funds rate at CME, they're pricing in now about a 75% chance of just a 25 basis point hike. So that's more than yesterday and a lot more than the day before. So what does the market think? Does the market think that if the Fed cuts 25 basis points, there's going to be leprechauns riding unicorns over the rainbow to find their gold? I don't know. From a fundamental standpoint, I don't see how it makes all that much sense. That being said, we do have the VIX down around 15 right now, which is a lot lower and likely to go higher. So looking at some long volatility plays might be an interesting way to go, especially buying volatility at the very end of the day on Friday. That's where prices are lower. And we tend to see volatility at least marked higher the next day. Plus, we have 3 days for some crazy stuff to happen in our crazy world. So that's where I live, and I hope that helps. This is Dan Passarelli. Oh, and speaking of helping, I have a training all on trading time spreads, which are really, really great in markets like these because the term structure of volatility becomes beneficial. I want you to register for that by going to markettaker.com/REG. That's markettaker.com/REG. All right. I'll see you on the training. Bye.